All right, welcome back everybody to Altcoin Daily, where you subscribe because you're interested in making money in cryptocurrency. My name's Austin. If you hold Ethereum, you have until July of 2021, this year, before we see a major upgrade to the network that affects you. Breaking. EIP, Ethereum Improvement Proposal 1559, has been accepted into the London hard fork for Ethereum. This hard fork is tentatively scheduled for July of this year, meaning a major supply shock for ETH happening in 3, 2, 1. Whew. So what is EIP 1559 and how does it affect you? And actually, to be more specific, it's not quite a supply shock on the network. It's actually a major reduction supply shock on the network to be the most accurate. And this is what we should prepare for. So this proposal is meant to solve congestion on the network, a major gas fee overhaul, and here's what's changing. Basically, right now, if you want to get your Ethereum transaction complete, you can set your gas fee. You can pay more if you want the miners to validate your transaction faster. This bidding system not only raises network congestion, but it also pushes out the little guy, makes it so only the rich can have DeFi. Only the rich can get their NFTs bought and sold first. So that is what this is aiming to solve here. And it's happening in just a few short months. A hotly awaited upgrade to the Ethereum network that may result in ETH becoming a deflationary asset is now scheduled for the London hard fork in July. And this has been a long time coming. Ethereum lead developer Tim Bako previously teased that the decision would be made today, about 2 weeks ago, and proposed the inclusion on the core developers call today. There were no verbal objections. In a direct quote from this morning, "We're in a spot where the EIP is sound," said Bako on the call. "We're in a spot, I think, where it's ready to be included in an upgrade." And this is signed off on by Vitalik. The proposal, co-authored by Ethereum co-founder Vitalik, will transition Ethereum's fee structure away from the bidding system that allows miners to prioritize the highest bids. And the new fee structure will dynamically and programmatically adjust fees so users only pay the lowest bid for each block. So instead of the miners choosing which block they validate, usually the ones that pay more, it's just going to be algorithmically chosen. And additionally, the base network fee will now be burned on each transaction. A certain amount of ETH will be burned, potentially leading to deflationary tokenomics for Ethereum. So how does this affect you? This means that the more dApps, the more NFTs on the Ethereum network, the more Ethereum is burned with every transaction. Instead of how it is now, the more dApps, the more NFTs, the more ETH goes to the miners, who eventually will dump. It's a business. They need to make money. That's what miners do. And even if demand just stays the same for Ethereum, say it doesn't increase at all, if you reduce the supply faucet on the network, price go up. That's supply and demand. So let me put this into perspective. Give you an example. What if this had been in place for every single transaction over the last year? What if this had been in effect? An analysis of network transactions last year found that EIP 1559 would have burned 1 million Ethereum over the course of 365 days, almost 1% of the network. Earlier this month, research from ETF issuer Grayscale concluded that a deflationary mechanism will be a boom for Ether's price, creating a positive price feedback loop. So it eases congestion and it potentially makes Ethereum deflationary. And let me give you just one more example. To put this in perspective, if EIP 1559 was live just yesterday, it would have burned approximately $26 million worth of ETH, or roughly 17,000 Ethereum. Annually, that would equate to over 6.2 million Ethereum burned a year at the current rate, and that is significantly more than the new ETH being created and would therefore make ETH deflationary. So if there is more ETH burned than created each day, the supply lessens, the scarcity increases. Give me your thoughts down below in the comment section on Ethereum. As I get more information, I will make a video. I will keep you updated. We have major altcoin news happening today. Make sure you check the timestamps down below in the description. But let's keep going and next talk about Bitcoin. Why are we seeing a sell-off? Who's been selling? Well, apart from margin longs liquidating, if a long gets liquidated, that's a sell-off temporarily. My guess from the on-chain data, it's hedge funds rebalancing for the end of Q1 reporting. Many hedge funds have mandates to rebalance when an allocation gets too big, and BTC has outperformed incredibly. But let's look at who is selling and who is buying. Analysis. Whales, who are entities that have anywhere from 1,000 to 10,000 BTC holdings, hedge funds, exchanges would definitely qualify here, have been selling down their positions in this last month, right? We see this here. Let's keep going. Let's answer the question, are the newer investors selling or are the older investors selling? Looking at the age of coins in this sell-off, dormancy being low tells us it's young coins. It's new whales who bought in recently selling their positions. Who are they selling to? Who are the buyers? Strong hodlers. The red here shows the coins are moving to the hodlers with very little history of selling. Very interesting. So as a Bitcoin holder, the point of all this is that even though we are very much up year to date, this was a very healthy cool down. The data suggests that it's been the newer investors selling, maybe taking a little profit, and the buyers/accumulators seem to be the entities that don't really sell. They historically hodl. I'm going to keep doing research. I'm going to keep digging. As I get more info, I will let you know. I do want to take 45 seconds and mention sponsor of the channel, CryptoTrader.Tax, a very easy way to get your cryptocurrency taxes done. They automate the entire process. It takes less than 5 minutes. I used them last year. I will be using them this year. If you just search cryptocurrency taxes 2021, you'll see a 6-minute walkthrough/guide where I take you through the platform. I will link this down below. So whether you use Coinbase, Binance, Uniswap, it works for all exchanges. And by the way, only for you, if you are an Altcoin Daily audience member, every week, CryptoTrader.Tax is giving away a free cryptocurrency tax report. Just enter the contest, enter the giveaway down below. I will link this down below in the description. And for everybody else, feel free to use my promo code Altcoin Daily for 20% off. Check it out. Let's get to some altcoin news. Bison Trails has just launched staking and node services for altcoin Cosmos, meaning blockchain infrastructure service platform Bison Trails has launched support for running full nodes and staking on Cosmos. So this should greatly improve user experience if individual people want to try staking and or running a node. Bison Trails offers services to simplify the process of participating in blockchains, such as staking and running full nodes. The firm's customers include custodians, exchanges, and funds, with Bison also helping Web 3.0 applications connect to blockchain data. The firm partnered with Coinbase in January to offer services under the US exchange's umbrella. So many notable crypto companies use Bison Trails, and now Cosmos is using it to improve user experience. Bison customers can now use the firm's infrastructure to stake and delegate their tokens using participation clusters, earning transaction fees and rewards while securing the Cosmos network. Do you hold Cosmos? Do you like Cosmos as an investment? And now that they have participation clusters, what does that entail exactly? The participation clusters themselves are architected to withstand attacks. The Sentry nodes act as a layer of defense to the validator nodes, enabling them to stay hidden and private from the public internet and mitigating the risk of DDoS and remote access attacks. Very interesting. Thoughts on this? We could see Cosmos's network, nodes, and stakers get more distributed as the user experience just became a whole lot easier. Next piece of altcoin news. Bloomberg Terminal adds price data for Chainlink and 5 other coins. So what is Bloomberg Terminal? It is a platform that allows professional traders to monitor and analyze real-time financial market data. So these price feeds are now available to traditional markets through a trusted source, Bloomberg Terminal. And it's not just Chainlink. These new coins are actually Orchid, OMG Network, EOS, Chainlink, Tezos, and Stellar Lumens. So it shows that institutions are interested in Bitcoin and a few other notable altcoins to keep tabs on, showing this is an asset class they want to pay attention to. Small but bullish. Small but bullish. But that is the video. My name's Austin. See you tomorrow. Hit like.